Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we'll be discussing how to trade with Confluence. Now, this is pretty much how I look to view the market, how I interpret it. I find my direction using structure, then I use Confluence to apply that to the market to find out areas where I'm looking for setups and I want to enter my trades. So we'll go through what Confluences are, what we're looking for, typical setups that I look to take myself, and also some real life examples on pound AUD. So Confluences are basically just signals that align with the same outcome of direction in the market. So Fibonacci, moving averages, supply and demand, support and resistance, market structure, candlesticks, higher time frames. There's so many different confluences, so many different strategies, but pretty much they all mean the same thing. They all line up pointing the same direction, and us traders, we look for that to help increase the probabilities of the market going in our direction. Now, these are the two typical setups that I look to take quite a lot in my trading. Again, you can see a lot of this in my Telegram channel, but these are pretty much 60-70% of my trades look like this. I'm looking for higher lows or lower highs in the market along with structure. So the bullish version, we've got higher low, higher high, higher low, higher high. Now I'm waiting for a pullback to my area of confluence, normally looking at prior support turn resistance, prior resistance turn support, come to a nice level of the fib, 50% and below is when I'm looking for my trades, accompanied with a nice trend line connecting these high lows there to the upside is normally the setup that I look to take for my buys, and for the sells pretty much the same, just flipped. Obviously with the trend line there, the Fibonacci comes to the 50%, it could be the 0.618, it could be 0.786, but anywhere in those areas I'm looking to take my trades, accompanied with a nice level of support turned resistance. So this is pretty much what I'm looking for, and I always look for a minimum of 3 confluences. Typically the more the better, but I'm always looking for 3, and the core 3 I look for is trend lines, support resistance, and Fibonacci. I also look at higher time frames, moving averages as well. So there are other confluences that I do look at, but those are normally the 3, 70-80% of the time that will be in my trading. And I always use candlestick patterns to enter, so I don't really count that as a confluence. Again, you can count candlestick patterns as a confluence, but for me it's my entry signal. So if I don't get a candlestick pattern in these areas here, then there is no trade, even if there's really good confluence. If the market just comes to that level, doesn't show any sign of rejection, there is no trade for me. So I don't really deem candlestick patterns as a confluence. It's just an entry signal to enter, not to enter. So on pound AUD, we've got some really nice examples which kind of encompasses what we're talking about for this. Let me just delete this so we can start from scratch. So pound AUD, we had some really nice bearish structure. So that's the key thing we're looking for. We're looking for structure because that's all we're trading theoretically. Lower highs, higher lows is all we're looking for. But the structure we trade is very, very important. If we're choosing to trade structure that looks like this, then our results are going to take a hit big time. Certainly if you're using a trend following strategy like I do, following structure that is either very bullish or bearish, trading inside of this would definitely lose me money. Of course, there are strategies to trade ranging markets, but the confluences and the strategy we're kind of going over today is definitely for trend following markets. So we want to be looking for free flow markets like this and this to the upside. That's what we want to be looking for firstly. And then we're looking for, again, our 3 confluences, support resistance, trend line, Fibonacci. You can see here some really nice setups, just again, very, very simple to find as well. Nothing too magical with this setup. We've got the impulse here to the downside, creating us some new lows, pulling to the Fibonacci, nice wicks into that level, giving us the entry confirmation in that area. That would be a very nice, setup. Taking the sells, new lows, it depends on your target. You can look for a push back down to the low. That's very, very simple, just keeping it to the price structure of the low. Probably got about a 70-75% chance the market does return to the low. Potentially could look to push it forward to some fib extension levels. I don't really do that. I normally just take my profit there, or if I need to push it a little bit further so I can get a good risk to rewards, minimum 1 to 3, 1 to 2.5, then I might start targeting some other levels of support resistance nearby. But most of the time I'm looking at taking it into those lows. And you can see if we take this trend line and bring it across as well, you can see we just about tap it over there. along with this broken support term resistance. And if you get the fib from the high to the low, so this is where we had that lower high to the new low, you can see we just about tapped into the 50%, nice healthy rejection, and the trend continues. So these are really nice back-to-back setups. Again, very, very simple, easy to learn, but the key thing we're looking for is a clean structure. If you apply this to messy structure, you will not get the same results. And you can see if we take this trend line even further, we get another reaction there. It doesn't play out so well. And again, there's a clear difference within structure. You can see here how we had our last low high over here, and we create this low, so new low high. Now the market is in this very, very corrective move. This is supposed to be our impulsive phase. The market is in a bearish structure, like so. You know, this is our impulsive phase, and this over here is our corrective phase. We don't want to be seeing correction as we're going down, and we don't want to be seeing impulse, you know, as we're going up. That's backwards for our structure. Normally it's best to avoid them and move on. Here you can see how corrective price is. This is not a good sign, and typically I will stay away unless I've got some other confluences and some other setups look good, then I may look to trade it. But most of the time, anything like this correctly moving in the line with the current structure, I will stay away. So even though we do come into the Fibonacci, into the trend line, sorry, probably do have some nice Fibonacci confluence at the 0.618, and we do get some nice rejection, I would not take the trade because the market is very, very corrective, and that's not what we want to see. You can see over here, the market was very, very choppy, nice impulsive breakout. Again, very, very choppy over here as well. Nice impulsive breakout. Those are the type of impulses that we want to be following and we want to be looking for with our setups. Anything else very corrective typically doesn't give us as good entries, as good setups, and the results won't be as good. Sure, they may work out sometimes, but it's best just to wait for the better setups anyway, and just make sure you're taking trades that are worth the risk. And then eventually you can see the market reverses. So, you know, it's quite clear to see we had a huge impulse here. So this is backwards. We had a very, very corrective move to the downside, followed by impulsive retracement. Never a good sign. If you're getting corrective moves as the impulse leg and impulsive moves as the corrective leg, then the market's kind of a little bit backwards, and a good sign that the market may be looking for a reversal, which as we can see in hindsight, it does. We had this impulse here, market came back down again, another push to the upside, another corrective move back down, another big impulse move to the upside, and that gives us, you know, a very big reversal there. Higher low, higher low, higher low. Market then clears that high to create a new higher high. So now we've got bullish structure here, which we can look to follow. Market then has another corrective move here to the downside, another strong move. So now we're getting some really healthy bullish structure. So now we can be looking for some good buy setups. Again, applying the same principles, we've got our lower, higher low over here, sorry. Connecting the line there. Let me just move this out of the way. Connecting that to the higher low and to that higher low there as well, which will give us our entry, break and retest on that resistance, turn support. And if you get the fib from the last swing low to the new high, you can see we had a lovely rejection there of the 0.618. So again, this is really, really powerful stuff when you apply it to good structure, and the emphasis is on the good structure, because if you don't, it's not going to give you the same results. And that's pretty much the same for most strategies. You know, the confluences, you know, are there at the right times. You don't want to just be applying confluences just because you learned it here, you learned it there, so you're going to start throwing it into the market. You won't get the same results. You want to be very calculated and very detailed in your setups, and then apply your confluences, you know, on top. The confluences are not very hard to learn. You know, moving averages, supply and demand, support and resistance, the concepts are not too hard to learn, but knowing when to use them and when not to use them is the real skill with the confluences. So like I said, market structures like this, best stay away. You know, structure like this as well, best stay away. There's no clear higher highs and higher lows, so best stay away, especially when it's very, very corrective. We want to be seeing momentum, clear structure, clear highs and clear lows. This is what I talk all the time about in my live stream. So feel free to go and check this out for yourself, guys. Again, like I said, don't just throw it into the market just because you learned this confluence and that confluence. Don't just chuck it into the market. There's so many different confluences out there, so many different combinations. Find something that you can actually understand and you can create an edge from. You can do this through back testing. Make sure you get some good results from that before you start looking to apply it to any live market. So hopefully you found some use in this video, guys. If you have found it useful, please let me know in the comments down below. If you want to see more videos like this as well, let me know in the comments down below. If you did enjoy it, subscribe, drop a like, does really help out the channel. Hit the bell as well, almost forgot to hit the bell as well so you don't miss out on any uploads or streams in the future. But thank you so much for watching the video, guys, and I'll catch you all in the next one.